it's funny, the assets second, and people won't understand that if they've
Yeah,
never
yeah.
invested. The assets, I mean, not irrelevant, but it's not even close to the top of the frame.
What is going on, everybody? Welcome to another episode of The Remote Investor. I'm Michael Albaum, and today I'm joined by a former attorney, art collector, teacher, investor, syndication investor, and now real estate agent and brokerage owner, Jonathan Greene. So let's get into it. Jonathan Greene, my brother from another mother. How are you, man? Good to see you.
Doing well, Mike. Good to see you again. Glad to get on the other side of the mic now with you.
Yes, a little role reversal here, and it's going to be my pleasure. So, for anyone not familiar with the Jonathan Greene, give us the quick and dirty who you are, where you come from, and what is it you're doing in real estate today?
Yeah, I've been involved in investing since I was probably about 2 years old. So people think that sounds crazy. So yeah, 50 years. Because my dad was an attorney, as was I, but he was a real estate investor, and all we did when I went to his house on weekends was look at real estate. From the time I was a kid till he passed away, we were still doing it. So I really grew up understanding real estate in a different way, which was, of course, advantageous to me. But I learned a lot. I've probably walked, I don't know, 400 properties by the time I became an adult. So I really had even like osmosis experience, I call it, meaning
Totally.
my dad was talking to me about real estate and money literally every time we were in the car, but he wasn't forcing it on me. So I was learning stuff that I didn't even want to learn. And over time, it just kind of fell into place. And I, started to invest on my own after I was 18. But prior to 18, I probably owned parts of 20, 25, 30 properties in trust. And I knew the tenants. I worked kind of landlord management as a kid, and then started to do collections on the landlord end, on summers home from college and law school.
I love it, man. That's so cool because I feel like so many people don't have that experience. They have to get it somewhere else. So the fact you got to get it through your family was probably a huge leg up for you.
Yeah, I mean, the funny thing is, back then, because I'm so old, there was no internet. So there was no way for everyone to really know about this. There weren't a ton of books, there were a few. But so we didn't really, I never thought of myself as a real estate investor when I, got my first jobs and became an attorney. I was just always investing in real estate. Now it's like everybody's trying to like put a moniker on it, and I get why, and there's also tax benefits to being full time as an investor. But I really just thought of it as this is something that I do, and the way that my dad set it up, I was fortunate enough to be able to have the opportunities to invest in stocks. When I was like 13, I started investing in stocks. So he was just very focused on money and providing generational wealth, and I've tried to take that and do as much as I can for my kids as well in a different way because it's a different time.
Yes, it totally is. And I want to talk about that with you here in a little bit. But
Yeah.
going back to what you were mentioning just a minute ago about how you got a job and then you were just investing on the side because that's what you did. So was being a full-time investor like even on your radar? Was that an option? Was that something that you thought could be a potential for you?
No, I mean, I'm still not, I've never been a full-time investor. I probably have owned more properties than most full-time investors, not syndicators, but, on my own. But I like to do a lot of things. So I've never really been into one thing. Now my main thing for the last 11 years is on market real estate, as an agent and running big teams, but that just gives me more access to real estate. So I've morphed into more of a full-time in real estate, but I've never been a full-time real estate investor. I was an attorney practicing for 10 years as a prosecutor and then a criminal defense attorney. Then I spent 6 years in the art world, 3 years teaching at university, and then I got my real estate license. But the whole time I was investing in real estate, but for after 2008, where I got scared and just kind of like held cash for too long like a dummy.
Man, such a renaissance man. I love it. This is why I love talking to you, Jonathan.
I
Never
like a
a dull
lot of
moment.
stuff. People think it's weird, but again, if you look at culture now, and there's so many people who are working different types of jobs, like I just get bored a lot, and I also like to win. Like I like to be the best at something. So if I get to a level in a business where I don't see like there's really nowhere else to go, then I want to go build something else.
That's so great. That's so great. So you were a lawyer,
Yeah.
practicing lawyer. Was that
Yeah.
helpful during your real estate investing, or was it totally segmented, different buckets?
No, I mean, the best, the thing is probably of all my friends who I graduated with, maybe 50% are practicing law. I graduated a long time ago, but it's not what I learned in law school was just as much about life. And I remember being in law school and my favorite class was property, which is real property. And it's like I didn't understand why at the time. It was kind of all dawning on me at once. And I had just around then I started to buy on my own. And yeah, I mean, negotiation wise, I'm a killer. Like when I read Chris Voss's books, I'm like, I mean, I do all this stuff. He's awesome, but I mean, like,
He's amazing.
yeah,
Yeah.
but I was a prosecutor. I spent 10 years in the criminal courts negotiating every single day. I know every button to push, and it's interesting though. When I came to real estate, more full time as an agent and as an investor, I realized I was like way too hardcore from what I learned. I was dealing with like life sentences. I did the worst crimes out there. So it's like I had to dial it back and be a little bit more psychological about my negotiation. So
Yeah.
it definitely helped me. It helped me with levers and buttons and also reading people and understanding what's BS and what I should spend my time on and what not. And I think all of my careers, even if you look at my 6 years in the art world, I had 4 art galleries. I was a curator at a museum, and then I taught. I ran a museum management program at a university. But that's all aesthetics for house flipping. And I've always been a house flipper. I've been flipping since I was a kid. So it's more just like, oh, okay, now I know more about aesthetics and buildings. It got me into architecture. And now I'm like, at this age, I'm like real obsessed with architecture as a whole. So yeah, I think, one thing for all listeners, a lot of people think, oh, well, whatever I'm doing in my career, even if it's, they think it's nothing special, isn't going to apply to real estate investing. And I guarantee you, every single job that you ever do will apply to real estate investing. You just have to figure out how to maximize your skills and bring it to real estate investing.
100%. My first job out of college was a fire protection engineer for a
Yeah,
commercial property
yeah,
insurer. And I was like, oh, this doesn't apply. And then I was like, wait a minute. I'm consulting with people every day about how to save on insurance. Like,
yeah,
yes, this is absolutely applicable
yeah.
to real estate investing.
Yeah. I mean, just think about somebody who just like starts as like an assistant in a painting company. They're like, oh, that's not going to do anything. What are you talking about? You're literally in houses all the time. So
Yep.
you're getting to understand the nooks and crannies of houses. You're understanding why they're painting, which means they're probably doing other renovations. There's nothing that isn't going to be applicable, especially for people who are just good with people. If you're in sales, boom, then you can start to do off market acquisition in a different way if you learn what to do.
Yes, absolutely. Absolutely. Well, Jonathan, take us through to the transition of you now becoming an agent, running teams. Like, why did you decide to get into that?
Um, I it all could be summed up like this. The day I decided to get my real estate license, it's like a lot of people. I had just bought another house, but it was the first time I bought a house and was like, I loved my agent. She was like became a very good friend of mine, but I was like, why don't I just do this? I was only like teaching part-time at the time because I had a lot of income from rental properties. So I've really been on time freedom for a very long time. But I was just like, this seems like I love houses. Why don't I just do this? So I got my license and I did real well right away because I realized I just knew more than every other agent. I didn't really know how to do the business. I hate sales. I'm a terrible salesperson. I'm just really good one on one with people, and I'm
Mm-hmm.
good in houses. And I have the ability to tell people, don't buy this. And that's, the differentiator in real estate. Are you going to find someone who's trustworthy and honest? Or are you just going to find commission breath? And most of the time, you find commission breath. But it also helped me with investing. When I took the class to get my license, I was like, shit, this stuff is all stuff that like, my dad was telling me about. But regular residential agent isn't going to talk to you, on a residential transaction about riparian rights or egress of river. Like you need to know this stuff as investors when you buy weird stuff. So I
Yes,
really found it useful, and it almost kind of reinvigorated my investing edge.
I dig it. And I also dig commission breath. That's a
Yeah.
great term. I've never heard of it. I'm going to borrow that off
You
you.
know it when you smell it, though. It's bad. Yeah.
Well, you do, and I do, but I think a lot of beginning investors probably don't. And
Yeah.
so,
So let me.
talk to us about that.
Yeah. So commission breath actually can go both ways because a lot of new investors will think like, oh, this agent, piece of crap doesn't want to work with me. let's look at it from the agent's point of view. How many brand new investors come to an agent and they're like, I've never done a deal. I don't have any money, but like, I promise I'm going to do 10 deals in the next 10 years, but I'm going to do them all sub two. And you're like, I would never work with that person as an agent. They're of no interest to me at all. So there's a give and take on both sides of that equation. Commission breadth is just the reason why realtors suck is because they're working a job and they're not growing a business. The realtors, the 1% who are the best, are all building a business and care about their reputation. Everybody else, it's commission breath because they just want the commission and they're not even thinking about anything else. So, I
Yes.
mean, it's the same reason why car salesmen have a bad name. Nothing wrong with car salesmen. Some of them make a lot of money, the top 1%. The rest are just trying to hope to close that one sale and they're not thinking about the client. Because I didn't need the money when I became an agent, I was good because I didn't care how long it took. I wanted to make
Yeah.
sure I found the right thing. And I was very happy firing clients, which I think, if you look at going back to negotiating, I think that the biggest power you have as a real estate investor, no matter how much money you have or how long you've been in it, is the ability to walk away. And because when you're emotionally attached, you don't, and then you make dumb decisions. But when you walk away, you pretty much get whatever you want, and that's a negotiation technique that I learned a long time. Where I would just lay an offer down on that's the offer. You have to, you have a minute. Go outside. If you don't come back in a minute, it's gone. And I
Right.
would hold up my end of the bargain. And I can do that in real estate too. But you also have to, you have to realize like how much do you want it? And I don't want any
Right.
property that bad to bend my ethics or even care that much.
What was there a phrase like the person who cares least in a negotiation usually wins or something to that
Yeah,
effect?
I mean, I guess I don't know if it could be that way. It's just I don't need it. It's need versus want.
Need
I
versus want.
want real estate, but I don't need it, and I
Yeah.
actually don't even want it that much. I like it more than I want it. You know what I mean? There's
Yeah.
certain properties that I see, and I'm like, oh man, this would be a great flip, and the single family home buyers are just bidding these up, even though it's a total renovation property. So it's not in numbers don't work for me. I've never
Yeah.
stretched my numbers because my dad was just very good with money. So he taught me like this is the offer, and he would just make offers, and that's the offer. If you don't like it, no big deal. And he'd come circle back in a month. Hey, you guys
When it's
ready?
still
Nope.
sitting.
Yeah, yeah.
Yeah.
He'd follow up for years. He doesn't care, and I've been the same way in my off market acquisition. It's of no consequence. I used to have a thing where I would call every month these off market lists that I have, and I just 1 out of 4 times I would talk about the real estate, and they would always say it's so weird. You're the only person who calls and doesn't talk about the real estate. I'm like, yeah, I like the real estate, but I just assume you'll tell me when you're ready to sell. How's your kid? That's building relationships, and people think, oh, you're doing it fake. I'm not. A lot of those properties I never get. I just like the people.
Yeah.
They seem
Yeah.
cool, or maybe I can help them figure out a better way to do a deal.
Yeah. Man, I love that. I just love that. So, Jonathan, talk to us and our listeners about like as newer investors, because I think so many of our audience members are newer
Yeah,
investors. It like to your point exactly, working with an agent is intimidating or challenging because they feel like they have nothing to offer. Maybe they see themselves as not being ready yet. So, how does somebody get ready? How does somebody get to be able to be of value to an agent or get to be an attractive client for an agent, especially if it's just starting out?
yeah, that's a good question, and one that I think can help anybody who's listening who's like, yeah, that makes sense. One, get your finances in order right away. Get pre-approved. See what you can afford. Don't come to an agent talking about hard money when you've never done a deal. You're going to lose all your money. You shouldn't be flipping if that's your first deal. You at least need to flip with a mentor or do a JV deal. Just make sure your finances are in order. Maybe you don't have a pre-approval yet, but you should go get one because you have to know how can you go look at stuff if you don't know how much you can afford? I
Mm-hmm.
mean, because that's a bad use of time for the agent to show you 5 properties just to find out you can afford 200,000 less than what you want to look at. You can go to open houses for those. So do that. Go to real estate investing meetups so you can meet other investors. So you're a little bit more versed with the talk. Listen to podcasts, read books, ask good questions, and test the agent to see if they're really investor friendly. If you want to buy a single family house, you still want the best agent. Then you're going to ask more questions about how many residential transactions they do for first time home buyers. But if you want to find out who's doing the deals for investors, ask them like who their clientele is. And PS, just go on their Zillow profile. You can see all of their sales now because they're linked to the MLS. So they come up automatically. So if you see a bunch of investor type listings and sales, that's potentially a better agent for you who might understand the game more. If you see a bunch of multifamily sales, ooh, that could be someone who does house hacks, as an agent. And I'm telling you right now, if you want a house hack, you can't just go get a residential agent. They're completely clueless. They won't even know what a house hack is. That's just the facts of it. And most agents don't know rehab costs. So if you want to do a flip, you can't go to any agent. They're just going to tell you, I don't know, get a contractor. Well, contractors don't just walk over for free unless you know them, and you're not getting them in before you make an offer. So you have to kind of know the numbers before. So I would just say, to be completely frank, just have your shit together when you want to talk to someone, and don't just take the first agent or use your cousin Freddie, or just use someone off of a Facebook group. Try to make a connection with someone and explain, and don't bullshit them and say like, oh, I'm gonna crush it. I'm going to do 10 deals. You're not pre-approved yet. How do you know you're going to do 10 deals? You could screw up the first deal. Just be realistic. A lot of the investors, though, that I've talked to over the years who are now, way out, like you and like me, they all started the same way, and they just came in prepared when they wanted to get their first agent. And I think that's all it takes.
Yeah. I think that's great advice. What are some like screening questions that you recommend people ask an agent? Because I think that's also an intimidating piece is if I'm a brand new investor, I don't even know what I'm supposed to know, and I don't know what I don't know. So you and I might get along really well. I might like you as a person, but if you're a crap agent for investors, that might not come through during this conversation. So how do I screen?
Yeah, well, I mean, first you look at yourself. What am I trying to do? Am I trying to buy am I trying to buy a condo that I'm going to rent out? Am I trying to buy a single family? Do I need a 2-bedroom home? What am I trying to get? Am I trying to get rent? Am I trying to do short-term rental, long-term rental, mid-term rental? Do I want a house hack? Your house hack agent's not going to be the same likely as someone who might know more about midterm rentals. They could now because there's so many options on multi to do midterm in your other side. But I would just ask them, if you want a house hack, the first thing you want to ask is like, hey, how many house hackers have you worked with? If they look at you and they can't answer, that's not the agent for you. That means they've never been on Bigger Pockets. They don't know the terminology. And you just want to make sure that they are, because, multifamily buying is just it's a different story. You need to understand what you're looking at. That if they don't know what house hacking is, they don't know why you need a unit vacant. So they're going to be like, yeah, let's just get this. They're both leased through July. It's like, well, I'm using an FHA, so that's not going to work because
I need to move in.
Yeah, I mean, everybody has to occupy because everyone wants to use an owner-occupied loan unless they're a straight-out investor. So, understanding how to get clients out and only looking at properties with one vacant unit, that's really important. So, again, that's where going to real estate investor meetups will help you. You'll have a much better talk. Kind of the tip-off for me, if I talk to someone who's they're just using all the acronyms. Especially now, like if someone calls me and they're like, I'm really interested in Burr. I'm like, huh? Like, this isn't, we're in New Jersey. Like, you can't Burr.
It's not a thing.
Well, I just read the book. I know, like, the book came out 7 years ago. You know what I mean? It's just like, that's why you need to go to meetups to realize, like, it's not just about using the terms or somewhat, investors love to talk, this is on small scale my favorite thing to know they don't know what they're talking about is they're looking at multifamilies that are residential. So that's 4 units and less. Mm-hmm. And they're always saying like, well, what's the cap rate? I'm like, there is no cap rate because cap rate doesn't apply to residential properties. This goes by comps. So once they say that, I already know we're not far enough along for it to be worth my time. Mm-hmm. And, that's just because I'm busy. Maybe a newer agent does have time for that. So there is that thing. It's like, of course, this is called the remote investor. A lot of people looking to invest out of state. When you just have one unit in Detroit, it's hard to get a good property manager because you just have one unit. You're honestly useless to them. So your choices are slimmer. So when you're a brand new baby investor, your choices are slimmer. You're not going to get the best agents, but maybe you can get somebody under the best agent or someone the best agent can recommend who's someone who has the time to spend with them. But you can't go in either way expecting it to be perfect or thinking, oh, everybody's going to want to work with me because I have a pre-approval for an FHA at 400, when that doesn't get anything in my market.
Yes. I 1,000% yes. Go back, rewind, listen to that again. So just personal anecdote. When I first started investing in commercial multifamily, I cold called an agent who had a listing. I was interested in the property. He said, no, that one doesn't work. it's not available, but here are some other ones. I later found out he was a newer agent, a brand new multifamily agent. And Marcus, if you're listening, big shout out, big ups to you, man. Really appreciate it. But this guy was the hungriest and hardest worker I've ever met. And he worked under, just like you mentioned,
Yeah.
a really seasoned agent. And so half the time I'd ask him a question, he's like, Michael, I don't know.
Yeah,
Let me go
let me
find
go
out.
ask somebody. But see,
Let,
that's a sign of a great agent. A great agent never tells you they know the answer when they don't. Like, hey, what's that? When you're in a basement, you should always be asking your agent, what is that? Oh, that's the plumbing stack. That's the plumbing cap. That's your HVAC. That's your furnace. That's your hot water heater. Ooh, that looks like a structural issue. If you're
mm-hmm.
looking to be someone who's going to do renovations, you don't know contractors, you can't work with a realtor who's never done flips because they don't know how much anything costs. You could be, I've been in property so many times, especially now, because first time buyers are there's such limited inventory where I am, they're just buying dumps. And you're like, oh my gosh, like I'll bid whatever, 500 cash and I'll come in like fourth. And I'm like, yikes, who's going to win? And how much did they bid? And where do they
Yeah.
think they're going to get the yield on that? Because I know my numbers better. I know they're off. So, I think it's important to just know what you're going into and to look for transparency like that on both sides. Oh, to say to someone, I really don't know the answer, let me check with someone who knows, it doesn't make you a worse agent or a worse whatever business you're doing. It makes you better because you're going to make sure that you're giving the client the best answer. And
Yes.
I think that's really important. So yeah, good
Yes.
job, Marcus. Great job.
Yeah. He's the man. Let's shift gears here entirely to back to something you said at the beginning of the conversation, Jonathan, about how the market is different today and things that you're doing to set up your family for generational wealth. Because I think it's one of the main reasons people get involved in real estate to begin with, especially those who might not be as young investors but are looking to do something maybe not for themselves, but for their future generations. What is it that you're doing today, and how have you seen the market change from when you first got started?
Yeah, I mean, I'm flipping a lot less just because the numbers aren't work. I was never a high volume flipper. I flip one, two is the most I've ever was flipping at a time. I
Okay.
never really flipped more than four in a year. I just did what I wanted, but I flip for high yields. I don't even look at it if I can't make 100 grand. So, and my market supports that. It's just the price points have gone up now. So I'm
Mm-hmm.
flipping less. I'm not because I want to flip less. That's just not where the deals are at. I'm looking at much more commercial mixed use. I love mixed use. It's my favorite asset class of anything ever because I just like the hedge of retail or commercial and residential together. I just love it. I'm about to put an offer on. We're literally right when we get off this recording. I'm putting an offer on a building. So, and then I'm investing in a lot of syndications because last year I realized like I'm getting older. I'm over 50. I need things that are truly passive. And why am I always trying to do all the work when I can just trust someone who does this all the time? So the thing that I say about syndications for people who have enough money to get into them, or even if you're thinking like, hey, that's a good thing for the future, it's like I like multifamily. I have no interest in doing multifamily myself. I don't want to be a landlord. I don't want to, have 33 tenants in one building. So why can't I just trust somebody that I already know and they have a verified track record to just do it for me? And not only that, not only can I get into multifamily, now I can get into markets that I don't want a one-off. Like I was saying, when you have one property in Detroit, now I have multifamily in Chicago, Dallas, and Madison, Wisconsin, but I don't have to do anything.
Right.
I just sit there and read the stuff every month. Is there risk? Sure, there's risk, but it's true passivity. Even if I want to have control, I can't. And for a control freak like me, that's actually a good thing.
Yes.
There's nothing I can do to influence that, and I like that. And that's why I leave a lot of money in index funds too, because it's just I don't need that money. So it just sits there. Even when people are like, oh, the stock market's going crazy, I'm like, I don't know, it doesn't matter. It's going to come back. I'm going to follow the whole cycle. So
Mm-hmm.
yeah. And because I found syndications and more what I call buffers for my business. Like when I flip, I have a project manager. I don't go on site. I'll fire everyone. I'm a disaster just because I'm so meticulous. Like I know my limits. I have a buffer for, my team or when I open a brokerage, I have a buffer for everything just so I'm not in the exact one-to-one day-to-day because it throws me off my game, of like CEO mode. So now I am starting to look back into short-term rentals now because I kind of have the time and the bandwidth. And through my podcast, I've had so many guests who do short-term that I'm like, I'm ready. And I used to do it a lot. My sister and I owned a lot of short-term rentals before Airbnb. when it was just Verbo and HomeAway. So I have
Hmm.
the experience, and now I really enjoy the hospitality end, and it's kind of like a way to do a flip, but then get paid every week. you know, which sounds
Totally.
good. This and has great tax benefits. So yeah, I'm definitely going to get back into that. I was looking at turnkey assets as well, which again is more passive, but it's still hard to see right now. Like $100 of cash flow just doesn't do much for me. you
Right.
know, I need
Right.
something a little bit better, or you just stack up a lot of them.
Yeah. No, that makes sense. So, a bunch of follow up questions because we've had a bunch of syndicators on the show. I love chatting with them. They're always so interesting. And I always ask the question of like, when does it make sense for somebody to get involved in a syndication? Where in their investment life cycle does it make sense? And I've heard all kinds of answers. So I'm
Yeah.
curious from an unbiased person, when do you think it's appropriate? When does it make sense for someone?
Yeah, I honestly have changed my tune completely because when I started, I was like, oh, this is what you do when you're older. And now I'm like, no, affordable housing crisis. There's a lot of people who are making a lot of money in their jobs, and they're going to be what I call choice renters. There's no reason for them to buy a home if they're still single or they're just a couple, because in a market, just take a market like San Diego. In San Diego, if you have $5,000 in rent, you can get a sweet place. If you're paying 5,000 on a mortgage in San Diego, you live in a dump right now with the rates. You do. That's just the way that it
It's a
is with the
fact of the
rates,
matter.
even
Yeah.
with 20% down.
Yeah.
So it's smarter for them to live and rent now, but they still have this extra cash that they want to deploy. So if I were them and I'm accredited, I have a net worth, or I can get into a group thing, I'd be going to syndications almost first now, because if you're working 70 hours a week and you're making 250 grand, you really don't have time to, oh, I'm going to do a flip with my friend. No, you don't. You're going to lose money and you're going to get calls all the time. If you find a syndication where you put in your 50,000 that you have available, certainly that shouldn't be your only money. Then you just go for a ride. And PS, if you just read the docs every month, you're going to learn a lot about whatever asset class you're involved in. And then you do have a one-on-one. You can't change what's happening in this syndication. But I can tell you, and all my friends who are LPs will tell you this, when you're consistent and you're investing, you always have direct access to the people. At least with the syndications that I invest in, like I can send an email or text them and they'll answer a question. It's like, hey, why did you do this part on the renovations? Why do you upgrade the office suite? Well, because when it looks that way, that we're getting better renters in. So you can learn a lot along the way by being kind of passive. And again, everything has risk, but especially after what we've seen in the syndication world, I wouldn't blame people for being scared of it, but you just have to
Right.
do a lot of due diligence and talk to a lot of people and not be in a rush.
That's such good advice. And I dig. I mean, you should have been in sales, man. You totally flipped my script
I'm
too.
I'm the worst though. The thing is, I'm literally the worst. I don't like sales, but I like honesty. So like
Yeah.
when I can just say whatever I want, like I don't have a stake in the syndication game.
Right.
You know
Right.
what I mean?
Which is so you're the
Yeah.
perfect person to ask.
Yeah, I think people need to look at real estate differently now, and I think they need to relax on the social media lip because social media. There's lots of great social media. I love your social media. I think it's great, but like there's a lot of
Thank
shit
you.
out there. So when you have FOMO and you take FOMO to social media, you're going to get yourself in a bunch of rabbit holes that are just a waste of your time. So if you really just find trusted people and find trusted assets that have less risk, or at least they meet your risk profile. Some people like a little bit more risk. Maybe they want to invest in startups. Startups are
Yeah.
interesting, but you're just looking for a home run.
Right.
You're gonna
Right.
lose on 7 of 10, do okay on 2, and 1 you're gonna crush. But you
Yep.
got to lay it out on a lot. Syndications, you should do a lot better, but you also have to do a lot of due diligence, to make sure that you're, picking the right jockey.
And talk to us about like what that looks like. What does the actual DD on its indicator look like?
Well, I mean, look, first, to me, it's funny, the assets second, and people won't understand that if they've
Yeah.
never
Yeah.
invested. The assets, I mean, not irrelevant, but it's not even close to the top of the frame. First is, the actual operator. What's their track record? How many times have they gone full cycle, which means they've completed a whole deal, paid out the investors, sold the property? How many deals do they have now that are active? And what's their success rate, and have they had a failure? Because if they haven't had a failure, guess what? You might be the first one. It doesn't have to be an epic failure, but have you ever made a capital call? Because none of us want a capital call. We don't get into syndications, so someone comes and asks us for more money. So operators first, due diligence on them as a person, them as a company. To me, without any doubt, the most important part of the property isn't the asset, it's the debt that the syndicator is getting on the property. I'm so obsessed with the debt. If it's not fixed rate debt at 5 years or more, I have no interest and I'm not going to invest. I don't want any variable rate, nothing. I don't want anything to change. So to get those fixed rate debts, you're usually working with more experienced operators who have the connections and they've done more deals. So those banks know, like, hey, they're rock solid. And then after the debt is the asset. Is this an asset I'm interested in investing in? Do the things in the pro forma make sense? P.S. If you're new, 99% of the stuff's going to be over your head. So you need to be able to ask questions, watch some videos, listen to podcasts with syndicators. They're great. Or just read The Hands Off Investor by Brian Burke. It's literally like the syndicator's Bible. Greatest book that you could read on learning about syndications. But yeah, operator, debt, asset. There's a lot of other things that come up for it. But to me, like, if you're not interested in North Dakota, don't invest in a North Dakota syndication, because it's like there's plenty of options. If you don't like self-storage or don't understand it, don't invest in it because the yield looks good. Invest in things that it's like, ooh, this is cool. Like I'm in 3 syndications so far. That's it. I'm interested in them all. I like the way that the buildings looked. I'm very like aesthetically based. I'm not a yield investor. I want to make money, but like I have to have some not emotional attachment. I need to have an aesthetic attachment to property. When I flip, I have to really like the house because I want to make it look even better and keep the character. So I'm even an aesthetic flipper. I've never been like, I can't do anything cookie cutter. It just like would just kill me to be cookie
On the
cutter.
inside, you'd be dead. Yeah.
Oh, I'll tell you a quick story though. When I was married, my ex-wife and I bought this, like the best house in Fort Lauderdale, and we bought way like so smart about when we bought in Rio Vista. It's a small neighborhood right off Las Olas in Fort Lauderdale. Great house. It had a pool in the front. It was like a New Orleans style. Amazing. We went on the internet, like, I don't know, 10 years ago, and they knocked it down and put up like some shitty McMansion. Like, it's just like almost made me throw up. So, that's just the way that I am. And I think you have to, part of being a good investor is understanding your own personal biases and things that you like and not. When you just start looking for yield, you're going to get yourself in a few places that you don't want to be in.
Yep. I can attest to that personally.
Yeah, all of us can.
Right. Yeah. If you've been in this business long enough, I think you learned those lessons.
Yeah.
Jonathan, I'm curious, before we let you out of here, what's your thought on triple net, since you like the passive piece?
Again, just doesn't do much for me. If someone told me, hey, I'm investing in triple net, I'd be like, great, that's a great job, especially if you're buying and you're buying triple net. That, I think it's one of the smartest things. It just does nothing for me.
Yeah.
It's just too nothing. It just has I don't need a lot of flash, but it's just like, not for me.
Pretty dull. Okay. Yeah. I get it. I hear it. I hear it.
I mean, look, boring real estate's awesome. That's how you make money. But like I was saying, I need some like more visceral connection to really get me interested, or else because I don't need it. I don't need to do it. So I think that allows me to do it. But I don't think you should be a real estate investor out of need, because the people who are new and they're like, oh, I'm going to become a wholesaler because then I want to become an investor. It's like, well, you're going to have the commission breath wholesaler. You're going to be terrible. You're going to look for a 50K spread when you should be looking for like a 5,000 spread on your first few wholesale deals. Be smart. Don't try to, screw everyone. Build relationships. And if you do that, it'll be fine. So I think a lot of it is, self-awareness, self-analysis. One of the biggest things that people in the world generally are just missing. And a lot of us were missing those for years. I just did the work to kind of figure myself out. It's why I know I need buffers and why I can't go to the flip site, more than once a week, preferably like once a month. Just show me the stuff when it looks cool. Other than that, I'll just be pissed off. So,
right.
But like, people, the one thing I've said, I haven't talked about on a lot of podcasts, but like, the one thing that's missing from all of the real estate investing content is this kind of like ego and mental health strategy. Like if you have mental health, you're going to do every deal the wrong way. if your ego is high because you have a lack of self-awareness and you're just kind of like really insecure, all of your deals, you're going to seem like an asshole. Nobody's going to like you. You're going to have no opportunity to make relationships. So if you don't work on yourself, you're not going to be a good investor. So I would tell people who are like, if you're, personally struggling and it's economically struggling at the same time, it's not the time to invest. It's a time to invest in yourself. Make sure that you take a break. I took a break from a year from real estate because I needed to kind of reset my mindset. And I think that's what got me to where I am now, other than, all the things that my dad prepped me for and my hard work. But I needed a year off to kind of reset and figure out and adjust to mindfulness. And that led to, eventually led to my podcast, which you were on, which is about the mindful approach to real estate investing.
Yes, I couldn't agree more. And what's the name of the podcast, Jonathan?
It's called Zen and the Art of Real Estate Investing. We're at, 235 episodes now. So we've been crushing it. You were over 200 as well. So you're in this, and I see no reason to stop. I love it. I mean, like we were talking about before, the pre-call on my recording, it's like, I just like talking to investors. This is fun. You know what I mean? We're having fun. Two of us on here. Neither of us are getting paid for this. Somebody could hear this conversation, like driving on a back road in Missouri, get one tip, and like it could change their life. We may never know, or maybe we'll find out later. But the possibility that podcasts can deliver that type of information is just honestly amazing. And I don't think that it's a medium where you don't need immediate rewards. Like the reward is like, we have a conversation. Like we're already like, oh, I haven't seen you in a month. Like we're friends. Like it's fun, And I think, and P.S. I'm in 3 syndications with 2 syndicators. Both I met for the first time because they were on my podcast. So I've done a lot of deals. I have a lot of affiliate deals with people who I really believe in, who've come through. And I wasn't just going to find that by sending people emails and saying like, hey, do you have 15 minutes to go to coffee, when I don't like to go outside or, I don't drink coffee and I don't want to talk to anyone for 15 minutes. So, bring on a podcast. Let's go.
Right. Oh, I love it, man. I love it. Well, Jonathan, let's get you out of here. Before we do, where can people reach out to you? What's the name of your brokerage if they want to use you as an agent? How can people get in touch?
Yeah, I appreciate it. Website for the podcast is zenandtheartofrealestateinvesting.com. Pretty simple. Right now, our website for on-market real estate is streamlined with a D.properties. And then you can find my hub site at Trust Greene, Green as an E at the end. And on social, you can either find me by my name or Trust Greene. I'm very easy to find. And I have a YouTube channel, crap ton of videos for investors, flip videos, agent videos, home buyer videos, home seller playlists. All those things are on my YouTube. YouTube's like the most undervalued social media asset because it's a search engine. I don't understand. Like, I guess it's just people if they're camera shy, but I've never even edited a YouTube video that I don't know, 400 videos. I haven't edited one. Someone's like, hey, you should do one about the New Jersey contract. Okay. Turn on the camera, record 29 minutes, turn it off. Upload, write a couple bullshit things in the description, do the keywords, and it lives there forever as evergreen content. It's just like, I look at a lot of stuff on YouTube. It's great.
Yeah, it's a pretty amazing resource. And you can learn for everything, right? It's not just real estate. You literally anything.
Half the people who DIY renovate, they're just watching YouTube to do it.
Yes.
I mean, I don't suggest that. I mean, but I've learned, anything that breaks like in your house, just go on YouTube. I mean, it's simple. Not that we, turned it into, do this as a social media part, but it's better than the other ones.
For sure. Well, dude, this was so much fun. Jonathan, thank you so much for taking the time. I really appreciate it. And we'll be in touch soon, I'm sure.
Yeah, man. Thanks for having me on, and thanks for your audience for listening. Appreciate it.
All right, everyone. That was our episode. A big thank you to Jonathan for coming on and sharing a ton of useful, practical wisdom and knowledge, especially for those folks who are just getting started and how they can best work with an agent. As always, we love hearing from you. Ratings and reviews, comments are very helpful for us in reaching a bigger audience, as well as catering our information and topics to what it is you want to hear. We look forward to seeing you on the next one. Happy investing.